Here's the heat map for single-family homes in the Silicon Valley. You can see there's been a change. Redwood City basically went to a neutral market along with Foster City. But again, those areas are right on the cusp, so there really isn't much of a change from last week. So getting into the data, here you can see we have on the 17th, a week later is the 24th, and then a week after that is the 31st, and then you can see the data extends past that. So we do have data for August the 1st. That data on August the 1st is through midnight on July 31st. This slide shows the supply, which is the blue line, which is below the inventory, or offers accepted, which is the red line, the demand line. So anytime the demand is above the supply, you have increasing price pressure. Here we look at the days of unsold inventory. That is going to be the blue line here. Anytime you're in this red rectangular down here, you're in what I consider to be a seller's marketplace. That's where you expect fairly significant appreciation, quick marketing times. If you're in the area here between the red rectangular and the blue rectangle, it's a balanced marketplace. And for whatever reason, the market spends very little time in that balanced marketplace. And then up here in the blue is a nice cold marketplace. So you can see we're sitting here right at about 30 days of unsold inventory, which is a pretty phenomenally low level for single family homes in all of Santa Clara County. The fuchsia line down here is median days on the market, and you can see we're at 10, which is pretty darn respectable to only be on the market for 10 days. And then the average is sitting here, and it's still going to be going up a little bit. You can see it's jumped up in the last couple of days to like 22 days. Again, 22 days for the average days on market, half the homes selling within 10 days on the market. That is a phenomenally fast marketplace. Now you look at prices, basically have been flat. Most people talk about the median price, which is this middle green line. I like quoting the 10 percentile and the 90 percentile because that sandwiches the price range. Basically, it's saying that 80% of the homes are between these three graphs, between the outer two numbers, and the middle point is the median that most people follow. Only 10% of the single-family homes in all of Santa Clara County are below whatever this number is, and it's right around 800,000, and only 10% are above this number up here, somewhere around 2.7 million. You can see this has dropped down, you can see the median has dropped down, and you can see the lower end has dropped down. That's fairly typical for this time of the year. The most demand for inventory in a normal year is the Friday before Memorial Day. The peak inventory is just around July the 19th. Once you have the demand going down starting on Memorial Day and inventory is still going up, that takes off some of the price pressure. And that's exactly what this is indicating these last couple days, weeks of data points here. Moving on to the overbidding. So here we have two different graphs. The first graph here, the light blue, is the frequency of overbidding. That is how frequently are buyers feeling the need to overbid us asking price in order to get the offer accepted. And you can see we're somewhere right now, I would call that maybe, because here's 40% down here, 60% up here. I might call that around 57%, something in that ballpark. Then you have the magnitude of overbidding. And you can see that's right up here. That's right about 101%, 101.5%, somewhere in that ballpark. That's how much buyers are overbidding. And basically, anytime we go through a scare in the real estate market, buyers get more stingy on how much over the asking price they're willing to pay. They overbid almost as frequently, but the magnitude of which they overbid is reduced. And that was why this number is so low compared to a frequency of 57%, or 57% of people overbidding. I would expect this to be more than 100, and I'd expect it up around 105%. But being somewhere below 102%, you can see there's a 3% delta. That 3% is the extra resistance buyers are having to go in over the asking price. Now we're looking at the distribution. This is monthly data for the most part, except for 2020. My monthly data currently is defined from the 1st of July for the next 35 days, which would be to August 4th. Clearly, we're not getting there yet, so we don't have 2020 data. So what is 2020 data? 2020 data is what's happened in the macro market in the last week. So I'm sort of comparing apples and oranges because all the historical data back here is single family homes only in Santa Clara County. The red line is the macro data, so throwing in San Mateo County condos and townhouses as well as single family, and adding in condos and townhouses in Santa Clara County. It's not a direct apples to apples comparison, but it shows where the pressure is. And you can see that red line right through here, and then it sort of disappears, but you can pick it up a little bit right there and a little bit here and a little bit there. So you can basically see it's buried in the middle of the pack. So for being in the middle of a pandemic with shelter in place and PEDS and all that kind of stuff, to be having a normal year is a pretty amazing adventure. Here we're looking at the macro data only. We're looking at it, so now we're comparing apples to apples. But up here, what we've added in is the best month, regardless of whatever it is. And then this is the best July. So the best month ever was April of 2018. The best July was July of 2019. And then here is the recent stuff and the blue down here is the worst month ever, which was December 2001, and the worst July, which was July of 2001. So the current data is this red line right here, which is the data that ended on, this says July 18th, which indicates it's not been updated. That bothers me. There has not been much change between July 18th, that this appears to be, and July 31st, that should be showing on the graph. I will investigate that for next week. Same problem here, not much of an update. At the end of the normal presentation, I'll pull up the Excel spreadsheet and show you there's not much difference. But apparently these two graphs did not get updated. So this is the data of the 18th. I actually believe the 25th was slightly better, and I believe the data for August the 1st is slightly worse, but they're basically the same magnitude. Moving on to the same data, but now showing it over time. So this is just the frequency of overbidding that we talked about, and you can see it's basically at 54% if I'm reading the graph correctly, and then the magnitude of overbidding is probably about 101.5% up here. You can see there's a red line right behind there, but it's basically right on top of the red rectangle, which makes it hard to see. So this is when shelter in place was announced. Sale price and overbidding is delayed because you need the sale price, which means you need the 30-day period of time for escrows to close. You can see that it ramped down, and then it's been improving ever since. I've changed the order of this graph, and I think it makes a little bit more sense. The next series of graphs are going to look at these components. And so we're going to do a summary first. And basically, if all the components are on the red line, you're having a completely normal year. They're all clustered around 100%, right around the red line. So we're having a normal year. And that normal year is defined as 2020 data compared to the median of the 5 years just prior to that, which would be 2015 through 2019. So taking those 5 years, which were all good real estate years, and then comparing it week to week. So you divide the year up into 52 weeks, and then you look at, we're in week number 30 right now, so you compare week number 30 of 2020 to that week 30 median of those 5 years. And you can see we're basically doing a normal year. The one thing that stands way out is this number of new expired listings. And that's a conflict that should raise a red flag in everybody's mind. If we're in a red hot marketplace, why are we having so many expired listings? The reason we're having so many expired listings is these are actually the withdrawn listings. And I have not proven this. I haven't gone back in the data, but it's the only thing that makes sense, and I'm pretty confident about it. It's the withdrawn listings from shelter in place being announced back on March the 16th. And those listings dates all have to have an expiration date in them to be a valid listing. And so when that expiration date arrives, they're showing, the MLS shows that as a new expired listing. So that is why this percentage is way up here. It's also the end of the month when you have the most expired listings. So you can see there's a lot of jaggedness here. The week that has the end of the month is when it spikes back up, and that's just because a lot of agents expire their listings at an end of a month. The other one that's the most out of line, because you can see this group of 1, 2, 3, 4 lines is right on top of 100%. The next one that's the most off is the green line. And that's a little disconcerting because this green line here is the number of new cancellations, which is a real small number. So that doesn't bother me. What I thought was going to be low was this yellow line that was low basically ever since shelter in place. But you can see this last week, it jumped up to 100%. So that's encouraging. And that yellow line is the number of closings. So number of closings are finally getting back up to normal. And I am actually a little surprised to see that. I don't know if this is a 1 week fluctuation. You can see it's a fairly significant increase. What I was actually expecting to see was it balancing out here somewhere around 90% and saying that more buyers are letting an escrow fall out of escrow versus closing it if they run into any trouble, figuring prices really aren't shooting up through the roof, and therefore they can go find another house without the problem that they ran into. Now we're looking at the components that looked into this, and this is days of unsold inventory, which is the most important. And again, what we're trying to do in this seminar is look at what's happening on the valley right now in the real estate market. So I'm looking at the macro data. The macro data is Santa Clara, San Mateo County, single family, condo, and townhouses all looped together. And I normally don't do this because there is no product like that, and understanding what that product is doing doesn't help you whether you're buying a single family home or a condo townhouse. When you're trying to understand the impact of an outside event like shelter in place and COVID-19, this is a very valid thing to be doing. Again, the gold line is the 5-year median, the blue line is the raw data, and the red line is the percentage. So basically you can see we're running a little bit below the red line at 100%. And this data is actually a positive because days of unsold inventory, the lower that number is, the faster the market is. And it's a positive for the seller's point of view. The buyers don't want a low DUI. Looking at the complete total active inventory without an accepted offer, and that's a key difference because most of the people out there that quote MLS include the number of, or include some of the pending transactions, which can give you very misleading data. So again, you can see the blue data is running just above the gold data, which means we have slightly more inventory than we normally do. But you can see the red is just slightly above the red horizontal. So the amount that it's off is pretty small. And, we can look at real numbers. You're looking at something like, if I was to guess, if, this horizontal gray line is 2,000 and the next one up is 2,250, I would say this year is right around 2,000 and maybe normal is 2,150. So we have 50 more listings out of 2,000. That's really a drop in the bucket, and that's why this percentage down here is so small. Now we're moving on to the number of new listings. Same exact scenario here. The blue line is slightly above the red line, or slightly above the gold line, which gives the red line above the red horizontal line. But again, the magnitude is pretty small. So we're having more new inventory coming on the marketplace. But again, if you look at it here, we're somewhere right around 500 versus some number right around 480. And, it is hard to get an exact number from these graphs because of the scale, which is why we get into the actual data so you can look at the raw numbers. Now we're looking at the demand side, the number of offers accepted just in the past week. And you can see we're down here somewhere around 440 offers were accepted, normal somewhere around 435. So we accepted a little bit higher than the 100% of what you would expect to have accepted. So demand is actually stronger than the last 5 years, which again were 5 strong years. And then we look at the number of closings. You can see the raw data here has been below the gold line consistently. And right now, this 1 week, we happen to hit right on the gold number. There appears to be no difference whatsoever. I don't know if this is going to cross over and stay above, if it's going to fall below. I'm a little surprised to see that kind of recovery. I was expecting it to stay maybe around 90, 95%. I don't know what the future holds. It could be as simple as we are really at 95%, but we're making up for some of this lost transactions. Because if you say that everybody that buys and sells real estate has to buy and sell, at some point we have to make up for this circle here, because we only closed the blue line number of transactions. We should have been closing the gold line. So the difference between them, which basically is this oval shape, is lost transactions. I believe real estate is more of an optional event, and many of those lost opportunities will never happen. Moving on to expired listings, you can see the raw count is somewhere down here just above 10. So, if we're talking about 2,000 listings on the market and we're expiring 10 new expired listings in the last week, that's really not a big deal one way or the other. You can see the gold line and the blue line are right about on top of one another, which is why the red line is crossing through the horizontal, because it has to get to 0 for week 31 because we don't have the data to compare it to, which is unfortunate, but that's life. The gold line, you have that going forward just because of the past 5 years, and you can see the spike for the number of listings that expire at the end of the year, and that probably will happen every year. And just like many agents pick the end of a month to have a listing expire, a lot more pick the very last day of the year for a listing to expire. And then we look at the number of new canceled listings, and canceled listings you can see have been trailing just below the gold line once we got beyond shelter in place. At shelter in place, they went way above because that was a phenomenal thing. Sellers said, hey, I don't want to sell. Then you can see we came down and we've been basically below 100%, but just barely below. But again, and also the number here is 60 listings. So if you're losing 60 listings out of 2,000, that's a fairly small number. And then we look at withdrawn listings, and the first thing you'll notice is the red line and the gold line are gone. And that's because the withdrawn listings, when the expiration date arrives, become an expired listing. And so you can't go back and get any historical data. And so all you have is the number of withdrawn listings, and we're basically been flat right here at somewhere around 30 days. I don't have the historical data, but I would suspect that's slightly on the low side, that maybe 35 or 32 days would be normal. But again, it's essentially, I would suspect, completely normal year. Now we're moving on to the heat maps. We look at overbidding first. Overbidding needs sale price. So this data is going back to the closings that were July 4th, and then actually the 35 days before that. And so this is pretty historical data. Now we're going to step through this, and there's the 11th. You'll notice there was no change. There's the 18th. You'll notice there was no change. There's the 25th, and there was no change. And no, I'm not a broken record. On the August the 1st, there was a little change. And what was the change? You can see the Palo Alto area went from gray to blue, and the Foster City went from gray to red. So here we go again. There it is. So this expanded out to blue. It used to be up basically like here. This would have been gray, and this would have been gray. Both of these are fairly small changes. Yes, it's a dramatic change on the color of the map, but when you look at the raw data, it's not that big of a deal. It's in the case of Foster City, it dropped below my threshold of 40. And if you're at 39.9 and you go to 40.1, that's really no change, but the graph is going to change the color. Now we're going to look at the same thing, but we're shifting to days of unsold inventory. And this is an important shift because this is the closest data we have. Again, we're looking at unsold inventory. We went back 5 weeks to July the 4th. Some people say that's only 4 weeks. I call it 5 weeks because there's 5 data points. It's Saturday to Saturday. So, it's 29 days, which I could understand people calling it about 4 weeks because 28 days is 4 weeks. But if you did 28 days, I'd be missing this particular graph, which is why I call it 5 weeks. You can see the whole valley is basically red except for right there on the San Mateo, Santa Clara County border. You can see it expanded into the San Mateo side of the border on the 11th. On the 18th, which for some reason doesn't appear to be labeled, I guess it's off the top of the graph. I'll resize that. You can see there was some changing up here in Redwood City. Moving on to the 25th. You can see everything came back to red except for the Santa Clara County side of the border. And then here we had Redwood City drop down and Foster City drop down, as I said at the beginning of the slide presentation. Overall, this is what a buyer's experience right now. You can see all of Santa Clara County is in a red hot seller's marketplace. The bulk of San Mateo County is in a hot marketplace. When you look at the data, knowing that Redwood City just changed over, and having looked at the data, that was pretty small. And Foster City up here is a pretty small geographical area, so it flops just statistically. Now we're going to look at data from last night. So this is 1 day earlier, and that's just so they can get prepared for today's meeting in time. We have four different major columns. Each column is essentially the same. The first column is days of unsold inventory. We're looking at shelter in place, before shelter in place. We're looking at current, and then we're looking at whether the change from before shelter in place to now, who that favors. So before shelter in place, a good part of the area based on days of unsold inventory was in a seller's marketplace. Condos in Santa Clara County were in balance. That would probably be the major exception here in white. Now when we look at it, we're basically almost in the same place. You can see Los Altos, Palo Alto, it's at 41, so now it's in a balanced place. But when you look from 37.5 to 41.5, that really isn't much of a change. And that's the kind of thing I'm talking about. You know, here's a dramatic change. Condos, we were at 19 days in San Mateo County before shelter in place, and now you're at 71. That's huge. And condos are hit a little bit harder than single family. You can see that there's 3 buyer favors, 3 seller, and 2 the same, where when you come up to like Santa Clara County, almost everything favors the seller. And the one here that favors the buyer, again, is pretty marginal favor. You know, 4 days on 40, that is 10%. That isn't insignificant, which is why I didn't say it's the same. Typically, if it's within about 2 days, I'll label it the same. You know, here's one that's basically 1 day apart that I labeled the same. So anyway, it gives you a flavor of what's happening. You can also see some of the raw data. Moving over to frequency of overbidding, you can basically see a lot of Santa Clara County was at 50% before, you're at 50% after. You can see there's been some shift. For example, Los Altos, Palo Alto went from 54% down to 32%. So that clearly favors the buyer. You know, you went from more than half the sellers getting over their asking price to just under 1/3, you know, so clearly. And you can see in general, this is favoring the buyers. I think the biggest thing is buyers aren't seeing the rapid appreciation. So if they don't get this particular home, they can go off next week and buy another home, so they don't feel that demand to buy this week. And then, as I mentioned before, going over to overbid magnitude, I expect these to be more negative than they really are, just because the buyers are hesitant to overbid, but you can see the bulk of them are the same. So it's sort of, you know, that's a downtrend, because, you know, here they're all the same, where the conditions of buyers feeling are mostly favoring a seller. So you can see that it's not as much. And then we go over to pricing. These are not labeled here before and after, because price doesn't have a favor a seller or favor a buyer in itself, but the change, the direction does. And you can see that a fair number have increased, so they favor the seller. A fair number are on the same, and there's only a couple that are the buyers. And for the last several weeks, I've been commenting about this area here being the moderate high condos in Santa Clara County being the only one that favors the buyer, and how weird that is, and how, you know, they're normally closer together like this. I did the research, and here's it. Here's the data and explains it. It's going to be a little convoluted, but not too bad. This is looking at condos, median sale price in Santa Clara County. You're looking at the county, which is the blue line. Then you're looking at the most affordable areas, 4, 9, and 11, which is the gold line. Then you're looking at the moderate low, which is Santa Teresa, Blossom Valley, Milpitas, North San Jose, Berryessa. Moderate low, and then moderate high, Santa Clara, Campbell, Cambrian, and Willow Glen. Now what you have to look at is this a sale price. So there's a 30-day lag, and we had this event called the Super Bowl back here on February the 2nd. So I wanted to get beyond that. And so what I did is I did 30 days back from shelter in place, which is not necessarily really good, because you're impacted by shelter in place at that point. But that was the definition I did. And that's right where you can see the moderate high condos in Santa Clara County hugely spiked. So I'm comparing this as my before price, because these prices for closings on April the 16th would have been negotiated prior to shelter in place. And that was why I picked that time frame, because if I picked March the 14th, which would have been my first go-to date, and I went back 30 days to close, you now have the Super Bowl, which would have had a major impact on things. So there just isn't enough days in between Super Bowl and shelter in place to get closed data. And this spike is pretty unusual, but you can see it clearly happen. And so again, back on this slide, the thing that's unusual is not that this number, the 791, is favoring the buyers. This 867 was a fluke high. So really I should cross that out and not rate this, because it's clearly that's the data point that stands out. So anyway, just since it had been bothering me, I thought I would dig into it. I dug into it, and there is the explanation. There's the raw data. And, you know, it's pretty unusual to see this kind of bounce when you're looking at all townhouses, condominiums in Campbell, Cambrian, Santa Clara, and Willow Glen, to move that number of homes up that dramatically. Because, you know, you went from about 800 up to 1,000. So you're talking about a 20% spike from the low point to the high point. And that's pretty unusual, but it's real. It happened. And again, it's probably not market values. It was probably market mix within that micro market area. Now we're shifting to a group of 11 metrics. And I did change the order of this, but didn't change it here. I moved the meeting days on the MLS from the very last slide up here to right after on DUI. And that's because it's actually meaningful data now. So I will move 11 back up to number 2. But other than that, each group of 11 slides has these 5 slides. I will only discuss one of the 5. Here's the first one of days on unsold inventory. I want to discuss the red line, which I can't really do here, so we'll discuss it here. So here's the 3 county points, which are Santa Clara County in red, San Mateo County in gray, and condo townhouses in Santa Clara County in yellow. And basically you can see that the single family homes have performed the same and are basically back to where they were. Townhouses and condos were doing better than single family homes before shelter in place, and after shelter in place, they're doing worse. Why is that? My speculation on that and a couple other things is people were buying townhouses close to where they wanted to work to avoid commute. With shelter in place, they're not commuting to work every day. Commute is not as bad as it used to be. Some people are hoping this is a permanent change and work from home. And therefore the desire to buy condos close to home went away, and they're shifting and they're buying a single family home, say down in Morgan Hill, Gilroy, or in Alameda County, Contra Costa County, over in the Central Valley. Stepping through the other data points and on to median days on market. So this is the one I just moved up. And the reason I put it to the bottom is the MLS had it, froze it during shelter in place. So we got down here to 0, and then you were stepping up, and this would normally be indicating a decreasing marketplace, but it was just getting back up to normal. So now you can see we're reflecting the market data for the last several weeks, and so therefore the data becomes useful again. You can see we've gone up a little bit from before shelter in place, but not dramatically, and I actually think that's a good thing. Without the ability to do an open house and have 200 people through in a weekend or even in one day, you now have to stagger the houses showings out. You have to have time to clean the home in between. I probably would be inclined to almost push for either a long one weekend exposure going from, say, Wednesday instead of my normal Thursday all the way through the following Thursday instead of my normal Wednesday. So normally I go from Thursday to Wednesday. Now I'd probably go from Wednesday to Thursday. So I'd pick up an extra couple days on the marketplace. And I think a lot of listing agents are doing that just to give more opportunity to expose the property. Here's stepping through the data. Now we're looking at the number of listings available. And so the large geographical areas have the most listings. So Santa Clara County stood up on top. Condos and townhouses are basically on top of San Mateo County for the most part. You can see they were the same before. San Mateo County had a little bit more. Now condos had a little bit more inventory, again indicating they're not selling as rapidly and building up inventory a little bit. So condo townhouses are definitely taking it in the shorts a little bit more compared to single family homes. Now we're looking at offers accepted over the past 5 weeks. Again, if you come back here, the yellow line, the condos, was in second place. Now it's in third place. So it's a shift between San Mateo County and condos in Santa Clara County. So anyway, same thing. We were going up, shelter in place dropped down. We basically recovered with the shift in the yellow line being the condo market. So again, not doing as well. Stepping through. Now we're looking at the number of closed transactions. Here you can see we're coming up, and it's also interesting. Notice the horizontal is my 3-week and my 1-week data points. So notice those are both stepping up, which indicates the number of closings is going to stay strong for the next couple weeks, which is a very encouraging sign. Here it is stepping through the different areas. And now we're talking about the frequency. If I didn't already say it, the handout is posted. So anybody that wants to get these can either do a screenshot or go to the URL and get a PDF of all 110 slides. Now we're looking at the frequency of overbidding. You can see we're basically been flat for the last several weeks. The condos, townhouses did a fairly significant swing here, and I'm not sure why that is. It's pretty unusual. Basically, this is 5-week data. This is the past 3-week data, and this is the past 1 week. And basically what it's telling me, just looking at this one data point, is that the condo townhouse market has a low enough frequency that just there's a lot of fluctuation from week to week. And that is one of the reasons why I picked 5 weeks to do my benchmark when the market was, a normal marketplace, was to have enough data point to get away from these swings so you could see statistically what was happening. And you can see how much smoother 5 weeks of data is. But, these little squiggles are real squiggles, even though I'm using 5 weeks of data. So 80% of the data is staying the same, and yet you're still having the squiggles. And you can see there's more squiggles in the condo townhouse and in San Mateo County than in Santa Clara County. And that's because Santa Clara County is bigger, so it's hard to sway that many properties. Stepping through the different micro markets. And now we're looking at the magnitude of overbidding. This is how much the buyers are willing to overbid. These numbers are lower just because the buyers have gotten shaken and they're not willing to offer 20% over asking price anymore. Now, that's not 100% true because there's 2 transactions that are over 140%. But, we used to have a couple up at 170%. So it's just the fact of life. When they get rocked to the core, they're not going to treat their money as funny money anymore. Now we're shifting over to sale price. This is the bottom 10 percentile. You're going to have more fluctuation here because you're only looking at 10% of the homes, but you're going to have less because you're down at the lower end of the price, so there isn't as much fluctuation. You can see condos and townhouses are somewhere right around 550,000 maybe for their 10 percentile. Condos, single-family homes in Santa Clara County are somewhere, right now dropping down to 100,000, but maybe 825 for the 5-week data. And San Mateo County is actually going the other direction and going up a little bit. But you can see San Mateo County actually was up higher here, then came down, and now they're sort of recovering, where Santa Clara County continued to go up and only dipped down very slightly here while we were getting our feet wet. And these are the closings that happened at the heat of shelter in place. Stepping through the data for the different micro market areas. Here's the median price for Santa Clara County, and you can see we're basically flat. You can see Santa Clara County in the red, San Mateo County is more expensive in the gray, and single family or condo townhouses in the yellow. Stepping through the different micro market areas. Now we're moving on to the 90 percentile. Here's the county data for 90 percentile. So this is what the most expensive 10% homes went for. And you can see in San Mateo County, they hit $4 million after shelter in place, while we're living with shelter in place. You can see that's come back down a little bit. Santa Clara County, you can see it's going up to 3 million. And the lower condo townhouse, you can see it's been climbing. That's encouraging that things are happening all across the board. Stepping through the different micro market areas. Now we're looking at duration of escrow. Duration of escrow really doesn't impact people too much, and it's even not a huge change. San Mateo County had the biggest change from 25 days here to 29 days. It hit up 30, but now it's basically 29. You can see each, week here, it's fluctuating back and forth, and actually that's each day. So I have data each day. So that's one of the things that's a little annoying with median is it's a raw data point. So you would never have a 29.5 days unsold inventory. It's just whatever the midpoint data point is. And that's why it steps up and down like that. You can see the trend, and whether it's at 29 or 30 days, that makes no difference. Here's the different micro market areas. And now we have the raw data, and this is as of this morning. That means it's data through midnight last night on the 31st. You can see DUI for Santa Clara County is at 27, which is on fire. Typically, the slow area is Morgan Hill Gilroy, but it's at 18. It's almost the hottest area. It did get beat out by Cupertino Sunnyvale at 17, but I've never seen Morgan Hill Gilroy this hot before. And I think that's strongly why I'm indicating that buyers are no longer willing to pay a premium for a convenient commute, which now Morgan Hill used to be an inconvenient commute. With shelter in place, it's become a convenient commute. People will go down there and bid. Now, it is interesting that with 18 days of unsold inventory and selling everything in 18 days, you go to Cupertino and you can see they're getting 104% and 69, I think that's 69, maybe 68% of the sellers are getting more than their asking price. You go down to Morgan Hill and it's only 46 and 100.1%. So you can see that in an area where they're not used to overbidding, people don't overbid. And when they do overbid, they're not overbidding as much. And that's just an interesting thing because they've never experienced a hot marketplace like they're experiencing now. This is the San Mateo County single family market areas. And then this is the condo townhouses for both counties. And then this is the data for monthly data. And then that is the end of the weekly data. And I'm not planning on going into the monthly data because anybody can get the handout by using this URL. So I will open it up to discussion.
Yeah, thank you.